Hi, this is Matthew Cratter from Trader University, and today I want to talk about 3 signals that the market is giving us that this is a bear market. Now, the first one is we're currently in earnings season, and when you see so many stocks being completely wiped out after they report earnings. So here's an example. This is a chart of NVIDIA, which reported on late Thursday, and was down 18% on Friday. You can see just really giving back a lot of its gains. That's NVIDIA. Another one is JWN, Nordstrom's, just being taken to the cleaners. Williams Sonoma, EverQuote, which is a fairly new IPO. These are a bunch of examples, and when you see this happening, it can be quite a bad sign. The other one is the moving average crossover. So if you look at IWM, which is the Russell 2000, you'll see that we just got a crossover right here of the 50-day moving average, which is the blue line, crossing below the 200-day moving average. This is setting up for a fairly good short. And we're actually getting close to the same thing happening on SPY, S&P 500, and QQQ. So that would be the second signal. And when all of these cross over simultaneously, it's definitely something to watch out for, because this is something that happens at the beginning of all bear markets. The last thing to watch out for is the action around the 200-day moving average. So you can see here, this red line is the 200-day moving average. We were only able to trade above it on November 7th, 8th, and 9th. And then we were repelled back below it. And you can see there's just a lot of resistance at the 200-day moving average. On big stocks like Apple, which have a big influence on the indices, you can see as well that it's flirting with its 200-day moving average line and having a lot of trouble staying above it. So you can see this line, this candlestick here, looks a little bit like a gravestone or a shooting star if it were at an extreme. But you can see it tried to trade above the 200-day moving average, was repulsed by sellers or repelled by sellers, and now it's just stuck. You can see on Friday it tried to trade above the 200-day moving average, but really couldn't. So I think that's the 3 signals. There's actually one more which I can mention. If you look at the indices or look at the big stocks, you can see that the daily volatility, the daily ranges have really expanded. So this is the Dow Jones Industrial Average. The DIA is the ticker for the ETF, and you can see compared to late last year, where we have these very small daily ranges. This year, both in, or actually that was back in September of this year, but you can see that here, ever since the beginning, call it October 9th or 10th, been having these very, very large daily swings. And it's a great trading environment, but it can be quite dizzying if you're an investor, and it can be quite stressful. So those are the 3 things to keep an eye on. Those are 3 signals that are beginning to lead me to believe that this is the beginning of a bear market. If you enjoyed this video, check out trader.university. And I've got a great course in there you might enjoy called Learn to Trade Stocks Like a Pro. And I've got a bunch of other blog articles and things you might enjoy. There's a link in the description notes below. And be sure to subscribe to my YouTube channel and click like if you like this video. If you have any questions, be sure to put them in the comments below. Thanks for listening.